Hello, everyone, and welcome to the Monday Open, hosted by the Vantage Private Client team. My name is Ollie, and joining me here today for the last Monday Open of 2025, we've got Steve. How you going, Steve?
I'm good, Ollie. Afternoon, everyone. Yeah, pretty G'd up for the last one before the end of the year, so should be a good one. We've got pretty jam-packed agenda.
Yeah, should be good. I actually just had a look back. So this is actually the 34th video that I've done, 23rd for yourself. I was actually looking back on the first Monday Open that you did just to see how far we've come. The Aussie was trading at 65, and it was actually the week just after Trump announced his big, beautiful bill. So, so yeah, how far we've come, eh? All right, so let's move into the agenda for the video ahead. For any of our returning viewers, this will all look very familiar, but for any of our new faces, this is how we normally run it. So, starting out, we'll take a look at the major events from last week and see how these drove prices. We'll have a look at the underlying themes and see what is moving the markets there. We'll then move into the week ahead section where we'll put a spotlight on a couple key different, on a few different major events coming up, see how these fit in with our key themes and give our take on where we think prices will go. We'll then move into the technical corner where we'll put a spotlight on a couple key different markets and analyze them using our technical indicators. And lastly, we'll move into the Q&A section where Steve and I will answer some of your guys' most commonly asked questions from last week. So starting out the last week section, on your screen, you guys will see your top traded products from last week. New addition into the top 10, we've got the Nikkei 225. Probably no surprises there, given that we do have the BOJ decision this week. But how about you, Steve? Notice anything
No,
interesting in there?
yeah, no real surprises. Obviously, with the Bank of Japan, it's probably one of the sort of important and key milestones that we'll see. So, yeah, looking into the last week, we actually saw four central bank decisions, which were expected. We saw obviously the Bank of Canada as well as Swiss, luckily at the end of their sort of easing cycle, they were on hold as expected. But the real big focus that we really wanted to focus on is the RBA as well as the US. So the RBA, the decision was a hold. Decision was unanimous, so no discussion of any sort of interest rate cuts within the meeting. And the concerns were really around the inflation. So we've seen that sort of 3.6 in September and 3.8 in October. So the inflation is well above the sort of target that the RBA is looking for. With the Governor Michelle Bullock also delivered probably a real sort of hawkish hold, and really cemented that the end of the interest rate easing cycle is basically it. So we're really looking at determining of whether there's going to be a hold for how long, as well as potentially a hike. So we actually saw it was basically there was no appetite to raise to actually have any sort of interest rate cuts, and there could be an appetite to actually raise rates next year. So Citi is one of the first among the major banks to actually forecast an interest rate hike in February, while the ASIC tracker actually has a 27% of a rate hike compared to 0% at the beginning of December, so December 1st. So that's a big sort of contrast compared to where we're anticipating, as well as the big four banks. We also saw the Aussie try to break that sort of resistance around that sort of 66.8 without any sort of success, and also dropped with the subsequent sort of surprise with the employment data that we saw after the RBA's decision. So, yeah, we also saw the China, the PPI data was bit worse than expected, but a lot of it was also around the US decision. So the vote came in at 9-3 in favor for 25 basis point cut. We saw Moran as a dissent. As expected, 50 basis points is what he was looking at, and there was no
We all
real
knew that was
surprises with
coming.
that. We also saw Austin Goolsbee, so Chicago Fed, as well as Jeffrey Smith, so Kansas, actually dissent. So there was three dissents altogether. They basically said on hold, and this is the most divided Fed we've actually seen in more than 6 years. So pretty interesting to see how we've seen with a lot of the sort of Fed meetings recently this year. The Fed also said that it will again be actually buying short-term Treasury bills to the tune of $40 billion starting on Friday, the 12th of December, which could have been a reason for the sort of recent sell-offs in the indices, especially the S&P as well as the Nasdaq on Friday. So last time we actually saw this was really 2020 in response to COVID. Although the Fed said it isn't quantitative easing, I'm sure people beg the differ. So there's a few questions as to the terminology to actually use. But yeah, Powell said that inflation has remained somewhat elevated due to the impacts of tariffs. And these sort of readings are higher than earlier this year. As inflation for goods has picked up, reflecting the impacts of tariffs, and is citing really the PCE as well as the core PCE. The underlying sort of predictions is that the Fed will cut one more time in 2026, as well as one more in 2027. So before the US decision, we did see positive jolts for the US dollar, so better than expected, but also a mix of unemployment as well as employment claims post the US Fed decision.
Well, I think also coming from the Fed, we did see the weaker dollar, which I do actually think that was a big contributor, or one of the big contributors to silver hitting at all-time highs, rushing down into the key notable events. Silver breaking $60 an ounce for the first time for a new all-time high. Other notable price or price milestones, we saw three of the major US indices, that being the S&P, the Dow, and the Russell 2000 all hitting all-time highs, as well as the Swiss and the Euro both hitting all-time highs against the yen. We've been speaking about that a lot. It's quite well documented. There's a bit of a yen weakness trend going on the last month, so not really too surprising there. And moving into the this week section. So starting off, we got the Bank of England official bank rate, who right now all the forecasts are looking like they are going to be cutting rates. So I saw an interesting report on Reuters saying that all 64 of the economists polled by Reuters are expecting that 25 basis point cut to bring rates down to 3.75%. All of them are citing factors such as the still high but slightly decreasing inflation. Currently, that's the CPI sitting at 3.6%, down from 3.8% previously. So it's not necessarily down where they want it to be, but it is slightly easing off, as well as a necessity for the Bank of England to cut rates to stimulate the economy following the latest budget release from the UK, as I've spoken about in the last couple of videos. So I think for all of our pound traders, all the eyes are going to be on the vote split, as well as the forward-looking policy to see how far the rates will go down, see if this is just a one-off while they wait for inflation to cool, or if this is the continuation of the easing cycle, which a lot of people were not expecting to come just yet. Next, wanted to look on the ECB. So the ECB is not really forecasted to do much in this. I did see a couple quotes last Wednesday from the ECB policymakers Valeroy and Simkus, who both firmed expectations for a rate hold in December. Overall, they suggested that there's no reason to raise interest rates this soon, with the latest CPI print for the Eurozone printing at 2.2%, which is slightly above their 2% target, but overall, no real reason for concern. So overall, I'm not really expecting too many surprises to come out of the ECB.
Yeah, I wouldn't expect too many sort of changes within the ECB. I think it's really the Bank of England as well as the US, which has more capacity for potential rate cuts. But most of the central banks really at the end of the sort of easing cycle. All eyes are probably going to be actually on the Bank of Japan around their predicted rate hike. So like what you've alluded to a bit earlier, the yen carry trade. We're seeing with the Japanese, so the Polymarket, which is basically the largest predictions of markets, is predicting a 98% of a rate hike to 0.75, which is a level that hasn't actually been seen in nearly 2 decades. So the main reason this is important is that we spoke about the yen carry trade previously, where it's basically institutionals borrowing yen at ultra low sort of interest rates and deploying capital in other markets outside of Japan, such as US markets as well as US treasuries, as well as crypto, which is going to potentially be impacted. So we're eagerly awaiting to see the sort of outcome with that. Just to give you context, Japan holds about $1.18 trillion worth of US treasuries as of September 2025, according to the US Department of Treasury. So the last time, and historically last time, we've seen sort of hikes in March 2024. The price of Bitcoin fell roughly about 23%. In July 2024, it dropped to about 25%. And following, January 2025, Bitcoin also slid more than 30%. So it's really going to be very interesting to see what the sort of decision is, as well as the projected rate hikes that could be following that sort of decision. So it really is going to be a driver of a lot of volatility this week as traders speculate as to what the decision is going to be, as well as a forward outlook. A lot of it's been sort of factored in, but yeah, it will. Along with the US data, that's probably going to also paint another sort of picture around the sort of inflation as well as employment. Post the US federal decision, which could see potentially a Santa Claus rally or even a sort of market seller. So it'll be interesting to see how we go with the sort of data this week. A lot of major sort of factors to really think about, and yeah, I guess we'll wait and see how everything pans out, especially that US inflation.
Yeah, I'm very interested to see how the US data actually moves the markets this way, given the next Fed meeting after that, I believe, is in February. So, interested to see if it'll actually move the markets too much, if people are expecting it to move the Fed expectations. But rolling into the technical section now. So as I mentioned at the start, so for the technical section, I'll be putting a focus on two markets, which I believe will be in focus for the week ahead. And I wanted to start off looking at the UK FTSE 100. We're looking on the weekly chart as well. As we mentioned before, we do have the Bank of England decision coming out later today. So I thought it's worthwhile taking a look at the price to see where we anticipate it could go. So for the year so far, dating back since the start of April, which is the very well documented, I think it's deadline day for the tariffs from Trump. But since then, we've been in a pretty consistent bull run. So we can see that on the weekly chart, we have been sitting above our 20-week moving average quite consistently. Quite consistently since first breaking above at the start of April. Recently, towards the start of November, we did hit an all-time high and did see a slight sell-off, but we still did seem to find support above the moving average. And since then, we have been ranging somewhat. On our MACD, we have seen actually the MACD just cross over its signal line, start to angle down, which typically is an indication or a signal of bearish momentum. So if we can see some divergence of that over the couple of weeks, it could strengthen a cause for bearish momentum. Otherwise, we're seeing the RSI kind of hover around that overbought area, but I don't think it's really going to do too much on there for the moment. So moving into the daily, we can get a bit of a better understanding of what we could be anticipating for the day. So as I mentioned, around the start of November, we did hit an all-time high, and then we had a pretty considerable sell-off, actually finding support midway between the 50-day and the 100-day moving averages. It since came up, found resistance around the 9,755 sort of area, and it's actually been been really respectful of this resistance. It's actually tested, tried to come up to test it or retest it on a number of occasions, dating through late November up until now, and it's failed to hold and close above this sort of area here. However, given the long term trend, I do think that there could be a signal for the UK for the FTSE 100 to retest these all time highs considerably. I'm also seeing just here a considerable number of higher lows dating back all the way through, and most recently here as well. So I'm looking for a signal of confirmation for the momentum either side. If I'm looking to enter into a buy based on the Bank of England decision, I would like to see a break and a hold above last week's highs. I think if we can see a break and a hold above last week's highs, potential pullback to find support and then a bounce up, we could see a retest of the all times. Similarly, though, if we do see the prices pull back and we see them make a lower low on last week, hold and close, and then start off the session after that going down, we could see it then retest, move towards its previous support, retest this sort of area, which is actually sitting on its 100-day moving average, which, as we know, it does like to interact with as well. So for right now, I'm looking on a signal either side for this, but I do think also in terms of risk management, if I am looking to go one direction or the other, I'll probably be looking for previous opens or close prices from days in and around that sort of area. So the next market I wanted to look at for this week, which I do think will be quite topical, is the dollar against the yen. Steve has spoken a fair bit about the yen just there as well as the US dollar with the Fed decisions. So you get an understanding of what we will be looking for this week. Similar story to the FTSE as well. Following mid-April, we have been in a pretty consistent bull run on the weekly. We can see that we were ranging for a little while through from July up until mid-October. Then once we did break the upper level of this this range, we did go on a pretty impressive bull run there. So we're also seeing on our 20-week moving average, this one has crossed over its 50 and its 100 moving averages and has angled up. But now we're seeing some divergence in our moving averages, which historically will act as a signal of bullish momentum. So to move into the daily chart for the dollar yen, get a bit of an understanding of what we might be looking at for the week ahead. So for this one here, if we're looking to respect the longer term trend and looking for opportunities to buy, I think if the prices can come down, and I think if we fail to make a lower low on last week, highlighted by this little range just here, if we can fail to make a lower low on last week, find support, and then make a higher high on last week's high, I think that would signal a continuation of the bullish momentum. And I think if we can see support around here, we could see a move higher to retest last week's highs. A break above that could challenge a 6-month high. And then if we want to go even one more on that, could be the yearly high. But we are waiting for signals of that along the way. Similarly, though, if we are looking for bearish momentum, that would honestly be supported by the BOJ rate hikes for this week as well. But I think for a confirmation of that bearish momentum, I want to see the prices move lower, make a lower low on last week's lows, see a test and a consolidate around this sort of area, and a hold and close below this level. And if we can see that, that would also be supportive of a sequence of lower highs alongside lower lows, which historically will be an indication of bearish momentum. So similar to the FTSE, I'm looking for signals on either side. I think there's factors which can push these prices either way, but I'm waiting for a signal. And also, if I am in this sort of boat, I will need to be very conscious of my risk management strategy, which will be looking at previous days, opens and closes for an idea on that. So that brings us to the end of the technical section now. So we'll now move into the Q&A where Steve and I will answer some of your guys' most commonly asked questions from last week. So Steve, would you like to take it away with question one?
Yes, so question one, what is quantitative easing or QE? So quantitative easing or abbreviated to QE is a monetary policy used by central banks such as the Federal Reserve. This basically includes creating money, so new money to actually buy financial assets such as debt, with the aim of lowering long-term interest rates, increasing liquidity, as well as stimulating the economic growth. So the concerns with this is that the Fed is effectively printing money. So they're looking at kind of like devaluing the actual US dollar, which could also cause further inflation as well as potential hyperinflation. So it's a measure which although the Jerome Powell has mentioned that they're buying the $40 trillion worth of debt. They've said that's not quantitative easing. A lot of questions are around whether it really is or isn't, but it is a good sort of question just to be aware of when it comes to the sort of different sort of cycles that and different policies that the Fed undertakes and the impacts it might have when it comes to certain assets.
And I'll take it for question 2. So, question is particularly for last week, why is silver taking off but gold isn't? So, for this, I will be answering this in the context of last week, but I do want to start off this one by prefacing that gold prices did rise too. It just didn't rise as sharply as silver. So the reason why, I think there's two main reasons particularly. First one is that we did see silver break $60 an ounce for the first time. And this is a key technical level and a psychologically significant level, driven by strong industrial demand, particularly in the AI space. So the strengthening AI space is increasing industrial demand for silver to be used in the infrastructure for it, which I think is driving a lot of the demand. As well, comments from Fed Chair Powell last week following the Fed decision were less dovish than expected, and it dampened the gold safe haven spike, which we did see in October when the Fed last cut rates. So when the Fed did last cut rates, we saw gold prices jump 2.44% compared to the 1.22% this time around, and I think that is based on the less dovish comments from Powell. So hopefully this does help to provide some context on the recent moves for silver, but I do just want to make sure that everyone is aware when it comes to price action that past performance is not always a reliable indicator for future results, and you should always make your own informed decisions based on current market conditions. All right, so that brings us to the end of the video today. A recording of this will be uploaded on YouTube once we have concluded. As well, we will be posting a link to this in our VIP chat room as well as on Telegram. For anyone who's looking to get involved with the Monday Open next year, send through any questions. Please feel free to reach out to Steve or I directly, or reach out to us through any of the channels, such as the VIP chat room as well. One also thing I did want to touch on as well, we do have a holiday closure for the Vantage team here. So we'll be out of office from the 22nd of December up until the 9th of January. So during that time, if anyone wants to send us any emails, please feel free to do so, but we may be slow to respond. Otherwise, we'll have our support team working the whole way through. So if anything urgent does come up, please feel free to reach out to the email address listed on your screen just there. All right. Well, I think that's all from us here today. Thank you, everybody, for watching, and we'll see you in the new year.
Thank you all. Enjoy your evening.